Very interesting headlines today with the Federal Reserve in Jackson Hole, Wyoming, and we see some conversations from some Fed officials. Yield curve inverts once again on fears the Fed won't save the economy from recession. And so, why does the market think that? Let's look at what Fed Harker says. Fed Harker doesn't see the need for another rate cut. Says central banks should stay here for a while. Kind of surprised. We've talked earlier this week about how we thought the U.S. might chase the rest of the world down to zero, but the Fed, several of the Fed officials come out today and they're not on board with that. The administration wants rates lower, but the Fed does not see the justification for it. It's also not the central bank's job to financially engineer the economy out of normal economic cycles. Recessions are normal economic cycles that are there that provide a reset. And so Fed Harker says we should stay here for a while. Esther George actually dissented on the last rate cut. The July rate cut was not needed. This is what Esther George said. Down here, she's the Kansas City Fed President. And then over here, Esther George goes so far as to say the Fed may be partly responsible for the yield curve inversion. And that's based on its balance sheet. The $4.5 trillion balance sheet, she says, could actually be causing the yield curve inversion. And so some technical details on that. And then, you have this interview with Jay Powell, and there'll be more Fed speak. So unless these headlines change, this is a bit bearish for stocks and also for bonds. It's would prevent the continued rise in bond prices, causing yields to go even lower in the U.S. So the U.S., the common thought was that the U.S. would join the rest of the world, but the mindset of the Fed is that we don't have to join the rest of the world in their recession. We are an economy independent of the rest of the world. And so very interesting headlines. Let's take a look at the trades today. We're net short based on tick count, tick pulse. Tick pulse is short. So this market is extremely resilient no matter what the news is. And I'm going to show you a chart of, let's look at a larger time frame chart. Let's look at a 60-minute this breakout chart. So let's look at this chart for a minute here and take a look at what we have. I'm going to pull out the purple pen. And so we have this market that rolls over, and then it bounces, and then it starts to roll over again. Instead of going down, it starts to rebound. Last week you saw the administration called the top bankers, and then since that time the market has kind of gone up. We call that the Plunge Protection Team. There's some joking about that, but it exists, and the banks come in, the Treasury Department comes in, and so it's oftentimes hard to trade a two-sided market when that occurs. And so we still have strategies that are biased to the long side, such as night trader. We are net short, and we did get stopped out, and we are going through a drawdown on the stock index portfolio. But if you look, night trader is still long. It came near its profit target down here. It came near its stop loss, and then now it's long still. But we are short based on adaptive moving average, and we're also short based on tick pulse. Those two strategies, those are the three strategies that are currently trading today, are actually still in the trade. 60-minute breakout was stopped out. Stock index swing NQ was stopped out as well. So night trader's long, adaptive moving average was long and flipped to short, and then tick pulse is short. So we'll see what happens. This seems to be the this incredible wall that comes in and prevents further selling and causes the market to go up, when in fact it probably should go down in a less controlled environment. But that's just the way it is. We trade it whatever the market comes our way, and we go through run-ups and we go through normal drawdowns. In the last few days, this choppiness has been more difficult to trade. Let's look at the narrow ranges. So this week has just been like this. So there's this desire to run the market up, and then it goes into this narrow range. The low of the week is support right here, and we'll see. I really thought that the lows from back here would be taken out, and the market would roll over further based on what we know about interest rates, and still would think that the market would roll over based on what we know about interest rates. But I mean, this market is really, there's an agenda to make sure that the market remains higher, and so we have to trade around it, whatever that brings us. Just short net 1 right now and take pulse, and so there's still an opportunity for the markets to still roll over as long as we're in these short trades. So that's the update for today. Interesting interest rate news. I love to study market psychology, interest rates news, and headlines, and wrap those around what we're doing with our trading systems and try to sync it all up. And that's what's going on in the markets today.